welcome to, as Omar says, a practical discussion on the challenges for Islamic finance and the SDGs. As you heard from the discussion between Stella and Dr. Laldeen, there is a natural alignment between Islamic finance and the SDGs because of the broader purpose behind the Sharia and the purpose of Islamic finance to support communities and societies rather than just enter into financial arrangements for their own sake. So in this discussion, we're going to look at the challenges that face Islamic finance when it's looking to implement the SDGs, the practical progress that we've made so far, and hopefully showcase the role for Islamic finance in achieving the SDGs. As you know, the countries in the OIC have perhaps a greater need for the SDGs than many others. And so this is a live and important topic for many of us. Let me briefly introduce you to our eminent panel. We have with us today Raja Amir Shah Raja Azwa, who is the Chief Executive Officer of HSBC Amanah in Malaysia. We have also Dr. Hayat Sindi, the Chief Advisor to the President of the Islamic Development Bank, and I was very pleased to hear Stella refer to the IDB as a beacon in this area. And we have also Arshad Mohamed Ismail, the President and Group Chief Executive Officer of Malaysian Development Bank, BPMB. Welcome, panelists, and thank you very much for being available to discuss this vitally important topic, especially for those of us based in the UK who are looking forward to COP26, which I think is only 4 weeks away now. Let us start with a discussion about the current levels of progress. I'll start with Raja to talk about the progress that Islamic finance has made so far in implementing the SDGs, and particularly the role that HSBC Amanah has had in that. But we'd be grateful for your thoughts briefly on the wider trends in the market as well. Raja, if I can hand that over to you.
Sure. Thank you, Farmida. Good afternoon. Assalamu alaikum. Bismillahir Rahmanir Rahim. It's a very interesting question, Farmida, and I do hope to create justice by sticking to the 2 to 3 minutes that's been allocated for this particular topic. But as we heard in the last session, the convergence between the Maqasid and SDGs are largely in harmony between the two. And as a result of this, we've seen quite a flurry of transactions within the wider market in support of this. And in Malaysia, which I'm sure my colleague Arshad will be speaking about as well, it's really regulatory driven in Malaysia. So a lot of push is being done by Bank Negara in terms of formulating the plans for the respective banks, stress testing, the full Monty in terms of what they expect Islamic banks in particular to do, in the concept of value-based intermediation. Now, in the wider market, before I go, specifically to our own financial institution, what we've seen in the market, especially within the context of 2020 and 2021, is an increasing number of capital market transactions supported by a number of financings, which have been in alignment with SDGs, or as we call them, green, social, and sustainable sukuk issuances. So one of the few that we can sort of point to was the recent Islamic Development Bank Green Sukuk. The other one, obviously, is the government of Malaysia. So this is the first time a sovereign has issued a sustainability sukuk, and we had the honor of being a sustainability advisor on that. Republic of Indonesia, we've heard obviously before, they were the world's first sovereign to issue a green sukuk. And also one interesting transaction which was done by Etihad Airways. So this is moving away from the sovereigns and the supras, but to a corporate who issued the world's first transition sukuk. Particularly, if I bring this back to what we've seen in HSBC Amanah, specifically, we issued the world's first UN SDG sukuk by FI in 2018, and I was personally involved in that at that point in time, and it was no easy feat to sort of comply with the regulations that are there, ensure that we're tagging the assets appropriately, and so on. So that's what we've done in that space. Since then, we have really grown by leaps and bounds. If I can just take a minute or so to explain what we are doing currently. So HSBC Amanah in Malaysia is the test case for the HSBC group, where we will be converting ourselves into a fully sustainable bank by 2022. So what does that mean, to be a fully sustainable bank? We're measuring this by compliance with Bank Negara's VBI, which is 51%, which is triple bottom line, which is focusing our efforts not only on the profit, but also on the people, prosperity, and the planet. And we aim to measure our compliance with this by ensuring that our portfolio of advances and financing is classified as 51% in line with triple bottom line. So that's what we're doing, in terms of really moving towards that sustainability. We are pushing very hard with our clients in order to be able to originate those transactions and assets as we build our book up. We have also externally made non-financial disclosure in terms of a TCFD report just this year. We're the first FI in Malaysia to do so. We're also part of the United Nations commitment of sustainability as well, which we have just produced our annual report just in August, the UNGC COP, to be exact. We've rolled out a number of products, which I can go on and on, but I won't do that in terms of supporting the sustainability agenda. And finally, just in terms of capacity building and engagement. I mean, that's what we are doing both internally, because as part of Project Cocoon, it's a 24-month extensive transformation. So it's a cultural mindset, physical, transition that we're doing, which aims to really, make people, empower the staff of HSBC Amanah to look at things differently and to look at that as a possibility to support the transition to a low carbon economy. And then just finally, I mean, it goes down to the ground in terms of what we're doing in terms of incorporating flexible working hours, diversity and inclusion, empowering minorities, and so on and so forth. I'll be happy to talk about it a bit more in the following questions.
Thank you. That's fascinating and amazing progress. Dr. Hayat, can I ask you to address the same question for the IDB, the progress that has been made in promoting the SDGs and the role that IDB has played and the wider trends that it's helping to support?
Thank you. Bismillah ar-Rahman ar-Rahim wa salatu wa salam ala ashraf al-anbiya mursaleen. First of all, I would like to express my great appreciation for your invitation to attend and participate in today's panel discussion. Is very important in global finance, Islamic finance, progress, challenges, and opportunities. As you know, also, Farmida, there is a need very much for new forms of financing and blended finance initiative that can bring different resources of finance together. And IsDB has had a great experience in creating innovative and blended finance initiative with partners, because partnership here is also crucial to meet the SDGs. So let me go through a few examples, practical example. One of them, the fund I run, which is the Call Transform Fund, 500 million Transform Fund, is a good example of an Islamic finance instrument to promote technology and innovation and science, which we believe is a very important for economic stability for our member countries and also for our Muslim community in the member countries. And also we use Transform Fund to promote and fund and support innovative, sustainable Islamic financing solution for the benefit of our member countries and then our Muslim community member countries using technology. I want to share with you two examples. One of them, we are supporting an Irish tech company in a partnership with the UNDP in Indonesia, with the pandemic, with the lack of donation and the rural area, the lack of financial instrument. So we use this technology, the blockchain platform, to ensure transparency in donations in line with the Islamic finance principles, adding value to the way Islamic giving is collected and distributed. The other example under this Transform Fund is a development of online training program. I hear we heard that from the previous recommendation from Stella, to develop professional on Islamic finance for the Sustainable Development Goals in partnership with the UNDP. If we look beyond COVID-19, we recently cooperate with the International Federation of Red Cross and Red Crescent. The IsDB established a fund to eliminate cholera and secure water supply and hygiene. The fund aimed to mobilize 150 million in grant from donors. IsDB will provide payable guarantees worth of 100 million, but not offer its own resources. thus to saving fund for other projects, but in the same time, it will enable to help 29 member countries to fight against cholera and make positive impact on the life of 5 million people. So this is a way of blended finance and also contribute to achieve SDG number 3 on health, 5 on gender, 6 on water, and also 17 in partnership. Also, IsDB has a long history of preparing project in health. So through COVID-19, we provide 2.3 billion COVID-19 strategic preparedness and response program as a comprehensive integrated response package from integrated type of blended finance within the bank. Another example of innovative Islamic finance in the bank is a 2.5 billion lives and livelihood fund with the Bill Gates Foundation and other partner of Islamic Solidarity Fund for Development, ISFD, and other development cooperation partners such as bilateral partners, NGO, Philanthropy, to join with the joint vision to raise and the poorest out of the poverty. Another also innovative blended finance initiative that also I run is we establish a fund with the partner with the IEA, the Atomic Research, Atomic Energy Agency, International Agency, with 500 million. It's called Saving Women's Life from Cancer, as a blended finance model using 5P instrument, which is partnership between public, private, philanthropy, people, civil society, with all stakeholders can be part of it. At the initial stage to save 5 million women suffering from cervical and breast cancer. Also, IsDB working closely with the government as well as to promote innovative Islamic financing. The bank has created financial sustainable framework which lays the foundation for the issuance of the green and sustainable sukuk to attract socially responsible and environmentally conscious investors across the globe to finance SDG. And we launched the green and sustainable sukuk in November 2019 at the Sukuk Summit in Luxembourg. Also, the bank is committed, we hear today from my colleague, to commit to support member countries through our Center of Excellence site in Kuala Lumpur, with mandate to promote Islamic finance, to support SDG, and also halal industry and science, technology, innovation. So I stop here, so many examples, but this is a true practical example. We've seen the outcome, the impact, and the sustainability of this, of all of the blended finance model. Thank you.
Thank you, Dr. Hayat. I think getting those specific examples is fundamentally important. And what I think was really meaningful there was the way you were linking each of the investments with the specific SDGs and saying this is the impact and this is what we're looking to improve. And we'll come back to that discussion because I think that's terribly important. But I think it's great for us to get an overview of where we are and the progress that has been made so far. So if I could ask Arshad to just let us know what Malaysian Development Bank has been doing and seeing in the market in the sense of progress that we've made so far. And then we'll come back and have a little discussion on this topic.
Thank you very much, Farmida. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. Good morning, good afternoon, good evening. Thank you very much for inviting me to be on this panel. It's a privilege to be on the same panel as Raja Amir and Dr. Hayat. We at the Malaysian Development Bank are on a dual journey. And what I mean by that, we are on our way to becoming a full-fledged Islamic bank. And we are also committed to the UN SDGs. Back in 2019, we took a critical look at the way we operate as a development finance institution. And we realized that we were operating too much like a commercial bank. We didn't understand, or we didn't make an honest attempt to understand why we were financing certain projects. And that was, in a sense, a wake-up call for us. And we sought help to develop an impact assessment framework to help us make decisions. Now, an impact assessment framework is not new, but it was new to us. And it was something that we had to do very quickly to ensure that the way we operate will help us meet the objectives that we were set up to meet. And we then had to decide which of the 17 UN SDGs we were going to track. And this was not an easy conversation. We had the World Bank working with us. As I said, we brought in people to help us develop the framework. And we then decided to look at the portfolio we had at that point in time. And based on our assessment, we realized that 5 of the 17 SDGs were most relevant to our portfolio at that point in time. So we decided to anchor our assessment framework to UN SDGs 7, 8, 9, 10, and 13. At the same time, we were on this journey to becoming a full-fledged Islamic bank. Today, as we speak, 80% of my portfolio is Sharia compliant. We have 20% to go before we can, inshallah, claim to be a full-fledged Islamic development finance institution. But that was just one part of our journey. As I said, it was very important for us to understand why we were going about financing various projects. And as a development finance institution, we also need to be prepared to finance projects that are more risky than what commercial banks would typically be able to digest from a risk perspective. And the impact assessment framework we have helps us make informed decisions. There was another question we had to answer. What if certain projects do not meet the minimum threshold? Should we, as a development finance institution, refuse to fund such projects? And to cut a long story short, the decision we made was not to reject such projects because for 2 main reasons. Number one, we had to understand how this impact assessment framework was going to influence our decision making, number one. Number two, we at that point in time were not too sure how ready our customers were to comply with the requirements of our impact assessment framework. But our ambition is to reach a point on our journey where we can draw that line and tell our customers and tell our stakeholders that if a particular project does not meet that minimum threshold, as a development finance institution, we will not fund such projects. Now, I think it's also important. I wanted to start off by talking about how Islamic finance fits very neatly into the SDG agenda. But Dr. Laldin, of course, very eloquently spoke about that, more eloquently than I ever can. But it's important to acknowledge that there is no need, in my view, to develop a whole new framework from a Sharia perspective. My personal view is that the UN SDG, the framework that we have, is a good reference point that any bank, whether it is an Islamic bank or a conventional bank, can refer to, that can turn to for guidance on its sustainability journey. Thank you.
Thank you, Arshad. And you've highlighted in your response 2 incredibly important topics there, which I know we have a bit of time, so I think it's worth discussing them. But just on the last point that you made, which is around whether Islamic finance needs to move to more of a purposive approach. Are we really looking to do good here? And so perhaps move away from some of the things that it's been criticized for in the past, which is that it's quite formalistic. You need to fall within the rules that are set out, and providing you can tick the compliance boxes or the Sharia requirements, that is sufficient. There seems to be an increasing move, and I'm sort of hearing it from you as well, that what we need to look at is the purpose. And if the purpose is about making life better for humanity, then that goes to the fundamental purpose of Islamic finance. And as you say, Dr. Laldin touched on that in his discussion as well, but this is a broad discussion that's happening in the market at the moment around the tayyib, or the ethical purpose of Islamic finance. Did you have to have quite a long debate in coming to the sort of pragmatic approach that you've taken, which is it'll be Sharia compliant when it can be, but otherwise we're going to look at the purposive approach here?
it wasn't very much of a debate. We had no choice, so to speak, because in a sense we were behind time. We had to make commitments to operate in a sustainable manner. We had to make commitments to financing sustainable projects. So I think, yeah, it was driven by the realization that we were not operating the way we ought to be operating. Having said that, we have not run into any problems from a jurisprudential perspective. The Sharia Committee generally is very supportive, but I have to say that going forward, I think it'll be very important for Sharia scholars, and again, we heard Dr. Akram speaking about this, it'll be very important for Sharia committees and Sharia scholars to pay more attention to the sustainability agenda. For the past 20 years, we have been focusing a lot on the form, and that was required at that point in time during the growth phase. But today, that is no longer sufficient. In fact, in my view, we would be doing Islamic finance a disservice if we continue focusing on the form. We have to look at the substance of what we are doing as Islamic financial institutions. And I'll just finish off by stating a very obvious fact. Financial institutions are very powerful institutions. Financial institutions can lead change. The question is, are we playing that role effectively today?
Thank you. That's a powerful finishing point. Dr. Hayat, can I raise with you a point that you mentioned and also that Arshad mentioned, which is the focus on specific SDGs. What we're seeing with developmental institutions is that they, in order to disperse funds, they want to have a look, they need to be sure of the impact that those funds are going to have. And so there is a focus on specific SDGs. Do you sort of see that as the way the Islamic Development Bank is going to drive progress on the SDGs? Has that become a requirement for your funding?
Thank you, Farmida. I think the IsDB always committed towards IsDB member country for the priorities and needs. And that's also what drive our strategy and vision for each year, of course. When we started Transform Fund, we selected SDGs that's also integrated with the whole, cross-cut with the whole the rest of SDGs. So we started with focusing on agriculture, which is hunger, of course, education, health, and renewable energy, innovation, which is also we noticed is a lag across the whole globe. And that's also from a fee to the challenges we face as IsDB as in general. So the challenges we face, especially the challenge of instability and the low level of resilience. And that's especially in the least developing countries. So when COVID-19 hit our least developing countries, especially, it's the sector of agriculture, which is SDG number 2, and education hit very badly because, of course, schools, children, farmers, sort of income, that's hit very badly. So that's also, for us, is important to concentrate on resilience, concentrate on these 2 SDGs, because to prevent the lesson learned. The other thing also to see as a general challenge for us, and also to feed and focus what type of SDG we should focus, is the financial gap. You know that every year our financial gap for our member countries is become like 1 trillion per year gap. And that's, of course, that's why we had to come with the innovative way and blended finance. So that's what we focus in creating the funds, how we can focus on SDG number 17's partnership. You cannot do blended finance, an innovative way, without involving the other stakeholders. Philanthropy, people who already did it before, and they established their own organization, and they can have partnership to see how we can mobilize, how we can do become as a guarantor to mobilize more funding. The other also challenge I would like to express here and feed to our vision is how we can mobilize and unlock the private sector. That's important. We always want the private sector to participate, but are we creating the right environment? Are we identifying the bankable good projects? So that's also here come with the SDG number 9, how we can have innovative, how we can have innovation in blended finance to be able to, also to create certain projects. The other one also I wanted to talk about, as you know, that's by UN data, and also we did our data with our member countries, we found that SDG number 9 has very significant low progress, and which is cut across the whole SDGs. So we need to improve the infrastructure of that. We need to give the tool to the young generation, because I believe through our Transform Fund, when you give people the right tool to build sustainable future for their own environment, they do it with pride and honor, because you will fulfill their full potential, with dignity and have prosperous future, because you already provide them with the right tool. And I noticed that with the young innovators, if they don't have the right funding or support, you break their soul. And then here you're finishing any form of innovation, any form of creating the right environment for the youth. So that's how I put it together, and to see how we can focus. And according to the need, of course, I mean, with the COVID and with the, with what's happening with catastrophe, with the least developed country, any natural disaster it hit them very badly. So we need to be really aware and in the front line how we can help them to cope with the pandemic outcome.
Thank you, Dr. Hayat. We've started talking about the challenges, which we will do. But if I could just go to Raja and just ask him to go back a little bit before talking about the challenges to talk about the role that the regulators have in driving Islamic financial institutions moving towards SDGs. I was very struck, Raja, that you were talking about the regulations being issued by Bank Negara, for example. Do you think that is the way we're going to make speedy progress on this issue?
Yes, I think the nudge by the regulator that we're seeing in the market is essentially, driving most of institutions and as well as clients alike to expedite their transition into a more sustainable economy. And I can give you an example of this, and this sort of moves into the complications or the challenges part, is that in most of our conversations with clients, when we talk to them about why is it important for them to start looking at these SDGs, or essentially what is their ESG commitment and so on and so forth, the initial sort of feedback that we got was that this thing is taken us by surprise. We were not, we didn't realize the level of acceleration that it would take. Are you guys going to stop financing us, for example, was some of the feedback that we were getting. And when we converse with them, and some of them think that this is an agenda by the financial institutions to make themselves look, to look greener than green or holier than thou. But we have to point them to the fact that one of the things which are going to be rolled out by the regulators in due course is what they call the climate-based taxonomy. And under the climate-based taxonomy, we are required to stress test for certain climate events. We are required to essentially denote our portfolios. What do they, what is the climate risk that that is inherently within that portfolio? So therefore, the question really goes back to the clients that we're talking about, is that you need to have a lens on this, because in the near future you could suffer access to capital if you don't start to look at this change. So I think in that respect, it is a joint effort between ourselves, the financial institution practitioners, as well as the regulators. But it's the fact that they are really pushing the agenda as helping accelerate the overall ecosystem.
Thank you. And so let us move on to, actually, I was going to say let us move on to challenges, but before we do, we are getting questions in, and there was a specific question for you, Raja, on is HSBC Amanah using any scorecard for measuring the bank's performance, the financial portfolio and operations in regard to sustainability? So it might be worth just covering that off before we move on.
Okay, so scorecard-wise, in the initial days of value-based intermediation, there was a KPI scorecard that they had rolled out. It was not public; it was on a private basis. So that it was not subsequently followed up thereafter. It was a pilot case. Internally, at the moment now, we have, because we're in the early days of these discussions, so we have a number of matrices that we are looking at in terms of our carbon exposure to the portfolio. What is the proportion of the clients which are going to be affected by the whole transition risk, as we call it. We call it a transition risk questionnaire. But what we are going to do moving forward specifically is as I mentioned, the triple bottom line adherence that we're going to need to do. Now, whether we sort of measure the matrix in terms of what is the carbon footprint that our clients are engaged in is something that could be in a 2.0. But what we are doing at the moment now really is dissecting the book. And when I say the book, I'm talking about the wholesale book as well as the retail book. And we're attempting to essentially classify our exposure to be in compliance with the triple bottom line, which is people, prosperity, and the planet. So we're literally going through each and every exposure that we have on the wholesale side. What are the kind of financings that we're doing in the retail side, on the credit cards, on the personal loans, on the mortgage. And we're basically looking at the profile of our borrowers. We are looking at the use of the proceeds of those borrowers in the attempt to essentially classify the total exposure to 51% to be in compliance with the triple bottom line.
Brilliant, thank you. And if you were looking at any sort of specific challenges that you're facing, are there any that you would particularly highlight?
I mean, in terms of the challenges, as I mentioned, it's a journey. It's a journey that we're ongoing now. A lot of, especially in this part of the world, agriculture is a big part of. Coal-fired power plants was pretty much, a big percentage of what we were doing. So that's obviously needs to move. So the whole transition discussion, the alternative energy discussion that we're having with various groups, but specifically, if I can point to, overall in terms of the onslaught of COVID, because I think generally we were making significant progress in terms of aligning with the SDGs, but what we've seen is that because of the effect of COVID, the number of people who are confronting hunger now has increased to about 270 million. Those who are facing extreme poverty for the first time since 1997, the numbers have increased tremendously. We've lost approximately 245 million jobs. Gender equality is certainly one of the key risks that we're facing. And because of this, I mean, this is really going to potentially affect the number of the SDGs in terms of compliance. For example, SDG 13, which requires us to take urgent action to combat climate change and its impact. SDG 14 and 15, which commits member states to conserve sustainable use of marine and terrestrial ecosystems. And one SDG 1 and 2, which is essentially ending poverty in all forms everywhere and ending hunger. So the list goes on, but essentially, I think, with the onslaught of COVID, a lot of the decisions have been put on the back burner. I mean, we've even undertaken an investor research, and this will probably segue slightly into the third topic, but it's, a lot of the focus from corporates have moved away from focusing on eradicating or, moving towards sustainable financing, because they're essentially trying to protect what's left of their business.
Thank you. Arshad, could I ask you to talk to us about the challenges that you have faced as you've been moving towards becoming an Islamic financial institution, and also looking at the SDGs that you will be supporting going forward? Are there sort of specific challenges that Islamic finance throws up for you, or is it the broader challenges that we've heard both Raja and Dr. Hayat talk about, whether that's COVID or climate change or transition?
Thank you, Farmida. No specific challenges, but perhaps I can share with you conversations we've had when we decided to become a full-fledged Islamic development finance institution. And the question was fairly simple. Would an Islamic development finance institution be able to serve all the developmental needs of a country, in this case, Malaysia? I guess there was some concern that by becoming an Islamic DFI, we might not be able to serve certain sectors of the economy. And the response we gave was that, as everybody here knows, the list of sectors that Islamic finance cannot serve is a very short list. And we are therefore very confident that an Islamic development finance institution can serve all the developmental needs of the country. So that's the first point. As far as challenges are concerned, I would say one key challenge is convincing our customers the need to make this commitment to the sustainability agenda. From their perspective, it is a lot more work for them to comply with our requirements. But as I said earlier, financial institutions are powerful agents of change, and financial institutions must stay the course. And of course, there will be a lot of pushback, but if financial institutions stay the course, then I'm confident that collectively we can make that change that is very necessary in our respective jurisdictions. And each organization does not have to address all 17 SDGs. And this was a conversation we had with the World Bank as well. The first question was, do you want to focus on all 17 SDGs? And my response was, I really don't know what we should be focusing on. And we landed on a very practical solution, as I explained earlier. Today, we focus on only 5. We're currently, and we've been running our impact assessment framework for close to 2 years now, and it's due for a review. And as we go through the review, we will probably be adding 1 or at most 2 more SDGs that we would want to assess every time we grant financing. So that has been our approach to the sustainability agenda. And even if I do say so myself, it has been a good learning experience for us. But again, as I said earlier, there has to come a point in time when banks must draw the line, and banks have to tell customers that banks that are committed to the sustainability agenda will not fund projects that don't meet the minimum criteria or don't meet the minimum thresholds.
Thank you. Dr. Hayat, before we move on to the opportunities, and I think we've begun to touch on them, there was a specific question that came in for you, which is, how can IDB support NGOs and humanitarian projects it says in water fields. I think it sort of means in water generally, and well-being. And I know that you've touched particularly on the well-being issue after the pandemic. But in terms of that sort of focus, is it, as Arshad has said, by saying, actually, the institutions will say, well, these are the specific SDGs we will be supporting. And so if you have a water project, you go to a specific institution. Or would IDB actually say, we're supporting all 17 SDGs and we'll partner as necessary?
As I mentioned before, and thank you for the question, if there is, because we receive demands and we request, and we've seen that increase since the pandemic, especially with, just like when I talk about Transform Fund, this year we receive about more than 6,200 interests for funding resources for certain SDGs that come from the local entrepreneurs and the local innovators, because they're the best to address their own challenges. So for example, when we did open the call for innovation this year, we opened the call for innovation, even though we're addressing the 6 SDG, hunger, education, water, renewable energy, infrastructure, and innovation and health. We focus that also in COVID-19 because of the demand. Especially now, we are focusing on the digital health for how we can find solution for a low-cost diagnostic, and also building the infrastructure for a manufacturer for a vaccine.
Yeah.
Because the inequality for distribution for the vaccine, we need to do something. Of course, the drug company, they're not going to donate anything for free, but also we can tap to the local resources, we can tap to the global, we can identify global partner going to help our countries to build a good infrastructure, and also build the roadmap for investors to build the infrastructure for manufacturing of the vaccine. And that's what we have in our new program we call IVAC, which is IsDB group for investment for vaccine manufacturing, and it's about another 1.4 billion. So far we have now 4.3 billion type of resources, blended finance and innovative finance, to help with the COVID-19 in terms of response and emergency, and also how to build the infrastructure, and to help our SMEs, because a lot of SMEs been hit badly by the COVID. So here it also, as I mentioned before, we always committed to help our member country for the priority and demand, and we assess, of course, the situation and depend on the demand, and then we seek the right partner. Like, for example, we built a great fund. It's called the Muslim Philanthropy Fund with the UNICEF and Al Ghurair Foundation in Dubai, and also with the King Salman for Humanitarian, to help education for school. We are now partnering with the UNICEF to build 1,000 school in Sierra Leone to be connected to connectivity, because that's also, you need to give them another way for them to be educated. So it's organic, as Arshad mentioned, as Raja, but also we are here to help our member country as to be the frontier, and also promote a new initiative. Like when we call for innovation, we know diagnostic is important. Priority for Zodiac now is a huge conference. I was part of it last week in the IEA, where it's like the WHO, the World Animal Organization, World Health Organization, with IEA get together to have this great partnership to be able to prepare. We have to learn from what's happened with COVID-19. We have to have a research and commitment to see how did we learn from, on how to prevent pathogen that can accelerate from animal to human, as that happened with the Zodiac. We learn from Ebola, we learn from the dengue, we learn from COVID, and Islamic Development Bank with so much also initiative to be able to help with this Zodiac, and as part of it is COVID-19. So that's, we need to be with the trend. We need to be always ahead advance, because if we don't listen and learn from what happened, it will be not practical to be in the same position again and again and again. And it's just like, you need unlimited resources, and also we don't have that. So we need to really get the whole stakeholder. We need to get the scientists, we need to get the policymaker, we need to get the government, we need to get the philanthropy foundation all together. And as you know, by SDG in 2015, the whole member state of the United Nations put science, technology, and innovation at the heart of it to cope with the challenges that we have, of course, plus the financial contribution and business.
Thank you. And I mean, we're sort of running out of time a little bit, and so we'll have to wrap up shortly. But we've talked about the terrible challenges that COVID has created, but there has been an increased focus on the SDGs as a result of the inequalities that it's shown up. And there is clearly increased investor interest in the growth of ethical finance. Do you see opportunities coming out of that? Are you optimistic that by bringing in all of those partners, we're going to be able to make faster progress to try and counteract some of this, retrogressive some steps that we've had as a result of COVID?
Thank you very much. Yes, because Islamic finance built on fairness and principle of fairness and justice, it's opened so many pathways to stimulate economic activities and promote social welfare financial inclusion and shared prosperity and poverty elevation. And we can see a lot of now institutions and countries seeking for Sharia finance. And Sharia finance generated, estimated for up to this year, 3 trillion resources, targeting 1.7 billion beneficiary. And because Islamic finance is asset forecast to reach this year by 2024, 3.69 trillion. So it's the fastest growing area of international finance. So I see a potential in to focus on emerging markets, least developed and developing and developed nation that can help them for the great. And that's just really a great way of getting really the formulate and embrace the right environment for innovation and for private sector. And I can see the potential here because of the requests we get and the demand. That's really, from the practical point of view, is a huge demand now for the Sharia compliance type of fund, because they can see that Islamic fund built in fairness and justice, and they can see it's an amazing way to have the whole financial inclusion and also attract other investors globally, regarding if they are member country or non-member country. We received that huge demand of people who wanted to understand more of Islamic finance. They want to implement Islamic finance. They want to have advisory board in their own organization, because they can see the huge potential of the fastest growing market and for the hopeful inclusion, and especially the emerging market and the least developing country market, where they see the potential for health, agriculture, education, as a great, if we have the right and allocate bankable project, and of course the global partners, the right global partners.
Thank you, Dr. Hayat. Raja, can I ask you, are you optimistic about the opportunities that this increased focus on the SDGs and ethical finance gives, particularly Islamic finance, particularly an organization like yours? We had a question in where one of our participants has said we need to improve the visibility around the value proposition of Islamic finance. What can we do as Islamic finance professionals to do that? I just wondered, are you optimistic? Do you think we're making faster progress going forward now?
Yes, I am extremely enthusiastic about the prospects and the opportunities. So much so that in some of the client segments that we are currently discussing with, we're actually breaching into territory which was not done before. So, for example, we're speaking to a multinational now about converting. So this is as a result of the push by the institution to default all sustainable or SDG related financing transactions to the Islamic arm. So as a result of that, we are now engaging with multinationals not based in Malaysia who have limited or no understanding of Islamic finance, and we are then assisting in the propagation of Islamic finance to non-traditional borrowers in that sense. And also, I guess in terms of the opportunities, I mean, the opportunities are there. People are looking for opportunities to be able to. I mean, when I say that they're looking for opportunities to sort of move up the value chain, people understanding why they need to do so. We have a really beautiful transaction that, if I may say beautiful, that we did with an oil and gas player just last year. So it's a sustainable linked financing for Yinsen, which is an oil and gas player. And they tied essentially the KPIs of their financing to their sustainability score. So this is, we're seeing players essentially who wouldn't even look at it, who are from industries which are on the peripheries of being able to raise financing. So I think that the opportunities are there. People are becoming more conscious. And I think just generally, I mean, we've seen what's happening globally with floods happening in Europe, in New York. We see the forest fires happening in Turkey and Greece. And so much is happening in terms of climate change, and if we don't address it, what's going to happen? So there's a lot of obviously things which are being brushed over, and we need to be very cognizant of that as we structure these products, and I think that the overall market is now focusing on some of these things. And I'm seeing also the non-traditional players coming into this space. We're seeing BlackRock, we're seeing Microsoft, Prudential, they're making commitments to looking at alternative financing. And we see that there's opportunities within these new technologies, such as carbon capture, carbon trading, aviation fuel. So things that, sectors which we wouldn't have looked at before are increasingly becoming important. So I think that the opportunities are there. And I think that Islamic finance is front and center to be able to support that. But if I just point back to what my esteemed colleague Arshad said, that we need to ask ourselves, are we doing enough, and ensure that we are doing enough.
Thank you. And Arshad, just moving on to you for our final contribution. Are you optimistic? Do you see many more opportunities coming out of this increased focus? And there's just a final question that I'd like you to link into that. We had a question about how we can integrate small farmers into Islamic finance. So is this, do we now have an opportunity to widen Islamic finance to perhaps the people who need it the most?
I'll answer the second question first. The bank I'm with is very much a wholesale bank, but that has not stopped us from doing exactly that. We have put together a financing program for small farmers in one of the largest states in the country. And how do we reach out to these farmers? We use technology, a digital platform. So again, going back to what Dr. Hayat was talking about, collaboration is very important. We know that we don't have all the infrastructure to do everything that we need to do everything that we can do, but with the right collaboration, we can still achieve what we need to achieve. So that's one. Going back to the main question, am I optimistic? Yes, I am optimistic. I'm also cynical. Of course, you need to have people who are cynical to keep everybody on their toes. Why am I cynical? And this is based on conversations I've had with people in your part of the world and in the UK and in Europe. I think some people don't think the financial institutions are doing enough. Now, that's not for me to sort of confirm or otherwise, but if there are people who see this as a real problem, then we need to keep reminding ourselves, we need to keep having these conversations at conferences of this nature. And hopefully I will be proven wrong. But I think we can all agree that whilst we can look at various organizations and look at the various initiatives that each of these organizations is undertaking, we have the examples from the Islamic Development Bank and HSBC. But when we look beyond some of these organizations, can we, hand to heart, say that the industry is doing what it needs to be doing? That's the question. And I think, if I may answer that question, perhaps not enough, not quickly enough.
Thank you, Arshad. And with that, I think probably rallying cry for what more we can do in the next 9 years before we come to 2030, by which time hopefully we will have achieved the SDGs. Can I thank our three speakers, so Raja, Amir, Dr. Hayat, Sindi, and Arshad Mohamed Ismail, for their thoughtful and fascinating responses to the discussion on what the practical challenges for Islamic finance and the SDGs are. Thank you very much, panelists.